Hi everyone. Today our topic is break-even analysis. So we are going to talk about all about break-even analysis, their importance, the graphs, graphical method, formula method, everything. So break-even, the break-even name itself, you can see there's a point something right indifference point, something like a little bit break-even, right? Even point. So what is the thing? So we are talking about the break-even. Mean break-even analysis is the relationship between cost, volume, profit at various levels of activity, with an emphasis based on the break-even point. This point is where the business receive neither profit nor loss, right? There is no profit, no loss. When total money received from the sales is equal to total money spent to produce the item of sales. So you can see this is a mathematical proven. We can justify the break-even like this way. You can see this is a point where total revenue equal total cost. So total revenue we can simplify like a price into quantity. You can say P times X, P times Q. Okay, here you can say without writing X, you can say even Q also correct. Quantity, price into quantity is total revenue. On the other hand, total cost is equal to the total fixed cost plus total variable cost. So total fixed cost TFC and total variable cost equal V into Q, that is variable cost per unit into number of quantity, right? For example, if producing 100 quantity, variable cost per unit is 100, and if you produce 3,000, right, 3,000 quantities, that is the total variable cost would be 100 into 3,000, this is 300,000. Like that, total variable cost we can multiply by V into Q, V into X, total unit variable cost into quantity. And the other one, you can see now we can, because you can see there are like a similar equation, we can take the TFC as a subject. So price into quantity is this side, and this side also you can see variable cost into quantity. So what we can do, I am sending the plus V times X into other side as a minus V times X equal TFC. And this is a formula TR equal TC. So I'm taking the X out, the quantity value out, and then I'm subject it. So what I can do, so I can divide both sides by price minus variable cost. So that is X equal total fixed cost divided by price minus variable cost. Okay, there is a quantity equal total fixed cost over unit selling price minus unit variable cost. This is the most important calculation, the proven, the technical analysis of the break-even formula, how it generates. Right, you can find out the mainly break-even point, the definition we can write down here. Break-even point is a point where total cost equal total revenue, where there is no profit or no loss, right? So you can write down that definition, the break-even point. The break-even point is where the point which generate no profit or no loss, where total cost equal total revenue, right? So break-even point definition again, we can see the in our textbook, we can see the textbook definition also. Let's go to that. Break-even point, we can see the level of output where the total cost and total revenue are exactly the same. Neither a profit nor loss is made. So you can write down this one. Break-even point is a level of output where total cost and total revenue are exactly the same. Neither profit nor loss is made. Right. So that's in the variable break-even analysis. If you do example calculating the break-even point, this is a formula we use also. When you calculate in the break-even point, we are using three elements: fixed cost, variable cost per unit, and selling price per unit. So this is a relationship. You can see break-even is a relationship between these three. So we derive that in break-even point equal total fixed cost over selling price minus variable cost per unit. So in mathematical terms, we're writing the quantity BEP equal FC over SP minus VC. Look at this example. Ed Winchester had a contract with the house builder to install fire alarms in a state-owned council houses. Ed charges $25 for each installation, and fixed costs are $20,000 per annum. And the variable costs are $5 per installation. $5 per installation. How many alarms has to be installed before the business break even? So we have the enough information is there to calculate the break even point, provided the fixed cost per annum. Always fixed cost we are taking per annum. Always when you're writing the break-even, substituting the numbers, fixed cost, we are taking annual break-even point, not the monthly break-even, not the monthly fixed cost, not the weekly fixed cost. We are taking always annual fixed cost. So they given PA stand for per annum. So fixed cost 20,000 divided by selling price of this one, charging $25 per fire alarm, and then minus 5. 5 is the variable cost per fire alarm. 25 minus 5. So 20,000 divided by 25 minus 5 is 20. So 20,000 divided by 20 is 1,000 units or 1,000 alarms. So that means it has to fit 1,000 fire alarms to break even. In order to cover his total cost, he has to install at least 1,000 fire alarms. So always when you're writing answers of the break-even point, you can write at units or fire alarms. Or this case, this is a fire alarm case study, so you can write 1,000 fire alarms. Right? Always, if you just write the 1,000 only, sometimes you can deduct 1 mark there, because the always is a quantity value, not the rupee value, not a dollar value. Right? It's always quantity value, units. Always you have to mention what is the units, whether it is a alarms or there is ice cream or there is a cats or dogs or like that. You have to always keep in a units, right? So this is the main break-even point. Now in my tute, you can see the break-even analysis is there, so we can point it down and the calculating the break-even point. Again, I justify the formula. When you're calculating break-even point, we're using 3 variables, right? Fixed cost, variable cost per unit, and selling price per unit. So break-even formula, always keep in mind, because in normally in exams that we are giving some kind of like a formula sheet, but break-even formula is not there in that sheet, right? You have to, therefore you have to keep memorizing this formula in case of there are past paper questions to find out the break-even. You should know this formula always, right? So don't mess up with the formula. Some people, I know they are doing some manipulation and they are make wrong calculation. Always break-even is fixed cost over selling price minus variable cost per unit. Sometimes this selling price minus variable cost per unit sometimes is known as a contribution. So some formula, some books you can see, sometimes the formula we can derive as a fixed cost over contribution. Fixed cost over contribution. So contribution means, again, contribution we are calculating SP minus VC, selling price minus variable cost. So always gives the result in units, right? So that's the formula for break even. So we can go to small exercise here. So I have given some kind of a like a small chart. So we can do it together. So you can send the answer to the chat line, so we can ask one by one. Like, so first case I'll do it for you. So fixed cost 20,000, selling price 20, variable cost 5. You can use a calculator here and you can give the answer. So first case, you can see the variable cost 20,000, so fixed cost 20,000, so 20,000 over divide by selling price minus variable within bracket, selling price 25 minus variable cost 5, right? Answer is 1,000. You can write out here, answer is 1,000, right? Okay, second question I'm asking from Amma. Okay, what do you think? What's the answer for here? Like fixed cost 20 million, selling price 4,000, variable cost 2,000. Others can actually send your answer through the chat line. Yes, I can see answer. Yes. Okay, Ranusha's answer get 10,000. So you can see 20 million, right? 20 million over 4,000 minus 2,000. So answer is 10,000. Yeah, correct answer given by even the other Rama and TG also. Yeah, 20 million divided by 4,000 minus 2,000. Okay, third question I'm asking from Rama. 75,000 here, 75,000 is the fixed cost, selling price 50, variable cost 15. What's the answer, Rama? Right, I can get some answers. Okay, when you are writing, getting answers, you have to round out to one significant figure. Like, don't give it in decimal points, because break even decimal values are not taking. if it's, you have to always round it to the like a always like a perfect number. So don't answer the decimal points. In this case, we can get the answer. Yeah, a lot of people send the answer the decimal points, 2142.85. So for 2 decimal points, but here we can't produce 85, so always round out to the rounding that number to another one. You can see this, we can say 2143 we can take as answer. Yes, correct answer actually given by one student, Ammar. So he got the answer 2143, correct, right? So but other student gave the answer the decimal points. That's why I gave purposely answer coming as a decimal. We to get a decimal answer, always round off to the nearest 10. Round off to the nearest 10. That answer here for this answer 2143 items. Right? Okay. The next question I'm asking from Adil. Fixed cost 25,000 and variable cost selling price 45 and variable cost is 34. So yes, I'm getting answers. We are here fixed cost 25,000, selling price 45, variable cost 22. Right, so if you get this answer, we have get another decimal point, right? 25,000 over selling price 45, so 45 minus 22. So the answer is actually 1087. Yes, I think 4 students gave the correct answers. Yes, Rama, Tevin, and yes, Ranusha. Yeah, they gave the correct answers. Yes, I think now you got it, because the answer coming is this is also decimal 1086.95. So you round out to the nearest 10. That is 1087. Correct. 1087 is the correct answer for here. Okay. Next question I'm asking from Tevin. Fixed cost 90,000, selling price 75, variable cost 34. Right. That's how to do 190,000 over 75 minus 34. Because here also the answer decimal value coming. Yeah, answer 4634. 4634. Correct. I think a lot of students gave the correct answer. I think you, yeah, okay. 4,634. Here also decimal points coming like 0.146, but we are not taking 0.14, so we are rounded out to the nearest 10. This is 4634. Okay, the next question I'm asking the 750,000. This question asking from Ranusha. 750,000 is the fixed cost over selling price for 1,000 and variable cost 800. So you can see contribution is 200 there. So 750,000 divided by 200 is easy answer. Yes, 4 students gave the correct answer. 3750, 3,750. Very good, right? So like that, it's other two also will do like that. Other two I'm asking from next question from TJ. Right, fixed cost 425,000 over selling price 156 minus variable cost is 82. So this is also decimal answer coming, so I can get the answer for yes 1, 2, 3, 4 students. Yes, yes, 5743. 5743 answer is correct. DJ correct. Rama correct. TJ also correct. Yes, 5,743. Okay, last question I'm asking from Saranya. 45 million is the selling price, right? It's fixed cost 45 million over selling price is 6,500, variable cost is 4,000. Okay, yes, 3 students gave the correct answer. Answer coming 18,000. Yes, 18,000 is the correct answer. 4 students gave the correct answer. Rohansa, Tevin, Rama. Very good. Huh? So I think now you have a very good clear idea how to calculate the break-even point. It's always the relationship between fixed cost, selling price, and the variable cost per unit. So break-even points, yeah, right, is like that. So past paper questions, there are 2 mark questions can become, you know, this kind of a thing, right? Now we're going to break-even chart, the important section. Break-even can be shown from the formula as well as break-even chart. So this is the break-even chart I'll show you. This is the normally like a typical break-even chart. In the break-even chart, we can find out the total revenue curve. Starting from the origin, you can see it goes like this: total revenue TR curve and total cost curve. That's starting with the fixed cost. You can see fixed cost line. You can see dot lines are fixed cost. So, and total revenue and total cost, the intersection point we known as this one as a break-even point, because that's why we always go TR equal TC point. TR equal TC, the intersection point is a break-even point. So, and if you go down until we meet the quantity axis, this axis becomes the quantity. Here the answer, the graph is 3. This is called the break-even quantity, PEQ, break-even quantity. And if you go to the vertical axis, the y-axis, the value that we call that's a break-even sales value. Break-even sales value is a break-even volume, then there's a break-even value. So we can see above the break-even point, the yellow color, this region we call the profit region, and below the break-even point, the blue color region entire, that is the loss region. Which means if someone in the business organization, if you sell, if you produce or sell, if you more than 3 items, that is you can earn profit. You can earn profit in a business organization if you sell more than 3 items, which means you're earning profit. So there's a one advantage you can find out. We can find out at different stages, in different quantities, what is the proper, what are the profits or losses you can enjoy, right? If you produce 6 units, you can find out what is the profit they can earn. We can take the total revenue value and total cost value, and we can find out the profit at quantity level of 6. If someone produce 2 units, we can find out then total cost is higher than total revenue. How we can calculate the loss in that case. So another advantage you can see, we know our break-even point is 3. So therefore you can set some sales targets for the department of marketing. Sales target, you can keep them, okay, you should sell more than 3 units this year with the machines. You can give them some target, you should sell more than 3 machines this year, right? So like that, this is always is a break-even. We have find out the annual target sometimes, because we are taking annual fixed costs, but we can actually convert it to even monthly, like a monthly sales target also as a result of that, because annual target divided by 12 is a monthly sales target, like that. So break-even chart helping is a helping tool for marketing management as well as operation management. Like this is a very good decision-making tool for a lot of areas. So that's why if you're watching this video, if you're relevant to not only examination, even if you're a person who are working in the marketing section, or if you're working in operation management, or if you're taking in like a general administration as a CEO, this is very important to get a break-even, a very idea. Graphically, we can get some very good idea, because mathematically, sometimes it will be tough, because mathematically we can't see the profits and losses. Sometimes hard to find and hard to make some sense, but graphically it makes some sense always, about the break-even profit, below the break-even losses. Okay, this is the break-even point, the point where no profit and no loss. Like that, we can find out this one graphically, and it's very sensible, so everyone can understand, even though you don't have any idea about the mathematics, you don't have any idea about the business. But by looking at this chart, we can get some idea. Okay, here we go. We have to produce at least 3. Our survival point is 3. Above the survival point only we can earn profit, and below the survival, that is anyway definitely loss region. So business can forecast their sales volume. They can set some plans to go more than always. As a business organization who seeking profits, they can talk about, okay, they should go at least more than 3. In a bad situation like a recession or depression, so they can reschedule their quantities at least 3 units at a survival point. In order to cover their total cost, they should at least sell 3 items. Like that, in a bad situation, you can make your objectives. You can say survival objective. In order to survive, they should know how much quantity they should produce and sell. Like that. So break-even chart, the definition of break-even chart, everything you'll see in the textbook also. We can see the same thing. That break-even chart definition is here. Right, so break-even chart definition, you see, write down the break-even chart definition. Here we go. Break-even chart is a graph that shows total costs and total revenue. It's a graph that shows total cost and total revenue. So break-even point is where total cost and total revenue intersect. Right, so this is a break-even graph. You can see, you can write down the definition in the handout. Break-even chart is a graph that shows total cost and total revenue. Total costs here and total revenue here. right? So they are defining by using their features. It shows the total revenue curve and total cost curve. Those are the main curves, right? And break-even point, and define the break-even point is where total cost and total revenue intersect. Chart is the chart that is we are drawing, showing the total cost and total revenue. And the break-even point is where the intersection point of the total revenue and total cost. So it's an easy definition, two sentences. In first sentence, they are saying what are the charts, what are the curves that represent total cost and total revenue. And second sentence, they are saying the even break-even point is a point where the total cost and total revenue curves are intersect. Right? So here also we can see another concept we can learn, margin of safety. Same thing. So according to this chart, the 1,000 number of fire alarms, like previous case answer, 1,000 fire alarms, and there are 25,000 is the cost, total cost at that time. Their fixed cost is 20,000 per annum. You can see. So break even volume coming 1,000 fire alarms. So above the 1,000 fire alarms, they have profit. That's green region, profit region, and below the 1,000 fire alarm, that is the loss region, red color, like that total revenue, total cost, profit region, loss region. And right now, imagine the person who owns the business right now installing 2,000 fire alarms, right? He got the contract to install 2,000 fire alarms. Now we can calculate his entire profit. So this above the break-even point and the actual quantity and the break-even quantity, we call that items margin of safety. Margin of safety. So margin of safety is where the amount of output available to be sold above the break-even point. Margin of safety is what? Sometimes we can answer definition questions. Okay, define margin of safety. So what is definition? That is the amount of output available to be sold above the break-even point, where the business make a profit. Okay, you can say sometimes it is calculated by actual sales minus break-even quantity, right? So margin of sales, that's a calculation method. So you can define this as the point where the above the break-even point, right? Amount of output available to be sold above the break-even point, where the business make a profit, where the business make a profit. You can see from break-even chart, what we can show, you can see this 5 points. Break-even chart will show the break-even point. Number one, break-even point we can find out, right? That's a very important advantage of break-even chart. Break-even in this case is 1,000 fire alarms. And secondly, at any level of output below the break-even point, business make a loss. We can find out at different below the break-even point, different outputs, what is the loss they are earning, incurring. And third point we can see, and any level of output above the break-even point, the profit they earn, different, above the break-even point, if you sell, how much quantities you sell, what is their profit level you earn. So in this case, if you sell 2,000 fire alarms, your profit is, you can see the total cost coming under 30,000, and at 20,000, your total revenue coming 50,000. That means profit we can calculate total revenue minus total cost, 50,000 minus 30,000, $20,000 profit he's earning at this quantity of 2,000 fire alarms, right? So let's see, explaining the case also, the total cost 30,000 and the total revenue 50,000. So difference between 50,000 and 30,000, 20,000 profit is earning, like that. You can find out at different quantities above the break even, how much profit they are earning, and different quantities below the break even point, how much losses they're incurring, right? And the fourth one we can find out from the break even chart is margin of safety. Margin of safety, this case, 1,000 fire alarms, you can see break even point 1,000. Margin of safety, actual quantity 2,000. So margin of safety we call MOS equal actual quantity minus break-even quantity. So therefore 2,000 minus 1,000, 1,000 fire alarms excess. It's like a buffer, kind of extra. It's important, right? And the last one we can find out from the break-even chart is the fixed cost. Some break-even chart we can find out the value of fixed cost. In its example, the horizontal line at 20,000 would be show a fixed cost like here 20,000 is the fixed cost starting point. Total cost always starting with the fixed cost. But some chart, the dot line, sometimes fixed cost can be showed. Like in my handout, you can see this chart. Break-even point is here, right? Profit region is there. loss regions is there, fixed cost is there, break-even quantity is there. Margin of safety only not here. So that's the thing. So that's why some charts, even fixed costs and even variable costs also I'm showing here. Fixed cost and the variable costs also some charts we can find out. But fixed cost and variable cost drawing is not essential, not important. But sometimes, a past paper question, I'll show you one past paper question. If you go to the page number 8 of my handout, you can see they're asking to, draw the break-even point. This is 2010 O level past paper question. They're asking the break-even, drawing the break-even point in the chart below. The Balbo thinks that the selling price is 20 pounds and it's higher than it need to be, and it should be decreased. So this is a little technical question. You can't. No, this is not a identification one. So they're asking how will we decrease the selling price. This is like asking the how to what is the impact of decrease in the selling price. This is a one type of question you can answer, like analyze question. But look at this question, identification of the points in the break-even chart. This question from 2007 May, like pretty old paper, but this one came in our all syllabus. 2007 IGCSE. They're asking break-even analysis used by some businesses as a part of the decision-making process. Below is a simple break-even chart. So you have to find out the the points. You have to name the number labels in the break-even chart. The first one has been done for you. Like that, you can find out now by using our break-even chart knowledge. You can find out the number one is a cost and revenue. Right, this horizontal vertical axis we call cost and revenue curve. Okay, number two, what is this curve, Adil? Number two, this is the started from the origin. Number two is what is the curve, Adil? Others also can you can use your chat line to answer. I'm asking this question from Adil. What is this curve, number two? Total. Yes, I got answer from chat lines. Yes, total answer is correct. Total revenue curve. Total revenue curve, right? Total revenue curve. Okay, number three. Rama, what is this curve? Number three, starting from here. Number three curve. Yes. Yes, Amma's answer correct. Total cost. Very good. Total cost curve. Total cost only the cost curve that's starting from we draw this curve before and the previous lesson. Total cost curve. This is total cost is a fixed. And okay, number four. What is this horizontal axis starting from here? I'm asking this from TJ. What is this curve? Number four. Which curve? Yes, answers are correct. It's a fixed cost curve. Very good. Fixed cost curve. Right. So that's number four. Number five. Answer. Number five. What is this called? Intersection point. Total cost and total revenue will intersection here. What is this point called? What is this cost? Yes, this is a break-even answer. Yes, answer. Chat line answers are correct. Break-even point. Yes, we told that is the intersection point of the total revenue and total cost, fixed cost, total costs and total revenue. Intersection point is a break-even point. So again, I'm repeating the answer is a total costs and total revenue, cost and revenue, number one. So number two is total revenue. Number three is the total cost curve. Number four is the fixed cost. Number five is the intersection break-even point. And number six is the quantity or volume axis, horizontal axis, quantity axis. So that's all. So you can see this 2007, this question came for us 5 marks like that. In 2005, another question, they're asking what is the revenue at break-even? How much units this does the batch identity to in order to sell or to break-even? They have given the chart, and from chart they have asked some questions to 1 mark questions, and what would be the profit or loss if 2,000 units are sold, right? This question I think you can answer, right? You can answer and you can actually do these questions and explain the effects of employing break-even. They're asking the explain question also. This should be 3 mark question. Yes, break-even analysis shows the result of what if questions situation. That's one advantage. And asking explain the effect of that employing 2 more machinists would have one batch identity limiters break-even point. So two machinists mean this increase the variable cost, not the fixed cost. If you increase more variable cost, what happen? Total cost will be increase, and total cost curve will increase. Mean then what happen? The slope will increase. As a result of that, you have to produce more items in order to break even. So impact is like that. So this one, the sensitivity analysis, you can see there are so many like a past paper questions like that. This is I picked recently, like 2007, 2010. These past paper questions are epic. Past paper questions are there, like from Breakeven chart. So Breakeven chart, you can see the definition. It's a chart where the total costs and total revenue curves are depicted or graphed, and the break-even point is a point where the total cost and total revenue curves are intersection, right? So now we'll move on to the advantage, disadvantages. Like you should know, mainly the break-even chart show. You can see the break-even chart. So the 5 elements in the textbook I showed you, break-even chart. So the 5 elements: the break-even point, the profit region, the loss region, the fixed cost curves, and break-even quantity, like that. So I talk about the margin of safety. MOS also we define there. Margin of safety is the difference between actual quantity and the break-even. About the break-even, how much company sold or available about the break-even quantity, which makes the profit. And this is important, the advantages and the disadvantages of the break-even. This is really important because when you're writing a 6-marker, or sometimes break-even questions, we can come even a 12-marker in new syllabus, right? Break-even analysis, evaluate the importance of break-even analysis. You should know at least 2 advantages and 2 disadvantages in that particular situation, but different situations, Main advantages mean from break-even, you measure the profit and losses at different levels of production. You can find out different levels, profits or losses. And number 2, you can predict the effects of changes in sales prices. You can find out the predicted effects of the changes. What happen if our sales price increase? What happen if our sales price decrease? Because sensitivity analysis we can do from break-even, because according to that sales to turnover, the total revenue curve can be, we can do some variations. We can manipulate the total revenue and we can find out, and different scenarios, what will be the total profit and losses. And third advantage is you can analyze the relationship between fixed cost and variable cost. Yes, and you can analyze the relationship between the fixed cost, variable cost, and also you can predict the effect of cost and efficiency changes on profitability. You can predict the effect of cost and efficiency changes on profitability, like cost and profit, efficiency. So this is a sensitivity analysis you can do. What if questions you can answer. You can predict the effects of cost changes and the revenue changes and efficiencies, like what happen if more machinists or more workers employ. What is the impact on break-even, like that? What has an impact on profitability as a result of that, like that? It's a very important tool for decision making. Overall, break-even is a very important decision making tool. However, there are limitations for this thing. We can exactly say the disadvantage. These are the limitations, like some limits. Break-even point is good, but the thing is, there are some own technical limitations are there. That's why a lot of people criticize the break-even analysis. You should know the however points also when you're going to evaluate the break-even model. This is the own limitation of this model. So what are the limitations? It assumes that sales price are constant all over at all level of output. Selling price is constant, which makes sometimes difficult, because sometimes selling price can be changed if you buy more items. Sometimes company are giving discounts. Selling price can decrease at certain like a high quantities. But here we assume that sales price constant, not changing. Even if you buy 1 item, even if you buy 100 items, the sales price no change. But normal business practice, if you purchase more items, the selling price can be reduced. They are giving some discounts on the sales price. That's how the business practice will move on. That's called purchasing economies of scale. But here we are assuming that it doesn't happen. Selling price will be constant, and assume that the production and sales are the same. We assume that, okay, if you produce 1,000 items, we can sell 1,000 items. If you produce 100 units, you can sell the 100 units. That is what is the difference. There is mainly another limitations. We are assuming that the business has no stocks. The business has no closing stock, which is very unrealistic assumption, because most businesses, like 99% of the businesses, they have a closing stock. Remaining stock is there. Even if a hotel, even if a bakery, look at the simple example. Always business have a remaining stock. If you produce 100 breads sometime per day, you can't sell all 100 breads. Sometimes 2 breads, 5 breads can remain in the business. So, but here we assume whatever the amount you produce, you can sell everything. That's a second limitation. Third limitation is the break-even chart may be time-consuming to prepare. You need more expert knowledge, helping hand, right? So it's very complex and time-consuming process. So it's a time-consuming, that's kind of a have a stress on the burden on the company administration, because you have to occupy some people, some accountants, some managers for calculating break-even. Sometimes this time can be used for another purpose. So it's affecting for your profitability and efficiency, time-consuming process. And also finally, the break-even chart, it can only apply for a single product, a single mix of products. That's another disadvantage. You can see break-even. A lot of business organizations now, they are producing diversified, like a product, not only one type of product. They are selling different types of products. We talk about the bakery, they're producing breads, buns, pastries, rolls. They are selling at different prices. But break-even, we are assuming that business only selling one type of item at a one selling price. For example, bakery only selling breads only, no buns, no hot dogs, no pastries, no Chinese rolls. That is unrealistic assumption, other one, because break-even only can apply for a single product or single mix of production. So that's also keep in mind, some businesses break-even cannot be applied, but there are some new models in a multi-product business how to do the break-even, that you will learn that concept in university level. How in multi-product business, there are some new mathematical models are there, how to break-even point will be applied, because fixed cost has to be divided on these products as well. But here we are assuming that simple break-even only apply for the only single product situation, not the multi-product situations. So these are the good and bad of the break-even point you can find out. Now, if you go to the textbook, we can see a nice case study. It's a kind of a Sri Lankan case study called Galle ice cream. So we'll see, we'll discuss that question. Here we go. The Galle ice cream, Galle is our Sri Lankan, the southern province, the city is a Galle, capital of the southern sector is a Galle. And then you can see it makes ice cream sold at retailers and restaurants in Sri Lanka. So Sri Lanka, we have a couple of ice cream manufacturers like Elephant House Ice Cream, Cargill's Ice Cream, and we are importing some ice creams also. But here the Sri Lankan manufacturers, there are local, plenty of ice cream manufacturers are there. So here is one like that, like Gold Ice Cream Company. So they're selling to retailers and restaurants in Sri Lanka. And standard ice cream product sells for 100 a kilogram. So 1 kilogram equal 100 rupee. So like this is like a not updated figures, because in right now because of the inflation, the 1 kilo of ice cream, it's a 1 liter of ice cream is cost around 300 rupees. So this is like a 100 rupees, like 3 times less than the actual figures. I'm saying because if someone who is looking at this video, so can figure out, okay, it's that much cheap. No, now it's not cheaper. It's like 1 kilo of ice cream is selling around like $1.5 US dollars. That's a price in Sri Lanka. The fixed cost and standard ice cream production is 100,000. So fixed cost of this firm to produce the ice cream is 100,000 per annum. And then the variable cost of production is a 50 kilo for ice cream, 50 rupees a kilogram. So now we have the unit selling price 100, unit variable cost 50, and we have fixed cost, right? All 3 elements we have, we want is there. Okay, question number 1, I'm asking this from Tevin. How many kilos of ice cream must the business sell to break even? Calculate the break even and tell me, Tevin. So it's 100,000 over selling price is 100 minus variable cost is 50. Yes. So I got the answer. Yes, Tevin's answer is correct. Yes, 2,000 answer correct. 2,000 what? 2,000 kilogram of ice cream. So that's okay. If you just say 2000, that's only 1 mark out of 2. You have to say 2000 kilogram of ice cream. Then only you get the 2 marks, because application is important, right? Just don't write 2000 kilogram of ice cream. So that means the business must sell at least 2000 kilograms in order to break even. 2000 kilos is a big amount, like 2 tons. So that is per year. You have to sell 2000 kilograms per year. Then you can fix like a monthly sales target, 2000 divided by 12. Monthly, you can say, okay, you should at least 167 kilos you should sell per month. That is, if you are selling this one in tubs, 1 liter tubs, you have to sell 167 tubs per month. Monthly sales target you can achieve. If you sell more than 167, so at least you should give them same sales target. Okay, then 167 is a break-even quantity. You should sell at least 300, at least 200, like this. Then salespeople will be motivated. Okay, if I sell above this, my performance targets I can achieve, like that. So it's very important to make decisions like that. So it's 2000 kilograms per year. Second question, what is the total cost and total revenue at the break-even point? What is the total cost and total revenue at the break? This question I'm asking from Adil. Total cost and total revenue. Total cost will first calculate. The total cost is case study. I'll do it in the whiteboard. Everyone can see there how to derive the answer. So this case, we have this information. There fixed cost is fixed cost equal 100,000. Variable cost per unit. Variable cost is per unit is 50. And selling price is per unit 1 kilogram selling at 100. So now we found out the break-even point. Break-even point 2000 kilograms. The question asking what is the total cost and total revenue. If you want to find the total cost, total cost equal TC equal fixed cost plus variable cost. At the break-even point, total cost is I see some answer on the chat line. So fixed cost is, you'll see, double check his answer, 100,000 plus variable cost. So 50 per unit, 50 multiplied by 2000. The answer 50 times 2000 is another 1 lakh. So total cost is coming here 1 lakh plus 1 lakh, 200,000. Yeah, total cost answer is yeah, Amma gave the correct answer. Total cost. No, I think the answer is here 200,000, right? So you have to calculate the at break-even point. The question they're asking, you have to calculate total cost and total revenue. The first question is like that. They're asking what is the total cost and total revenue at the break-even point. If you just figure out the break-even point is the 2000 kilograms, right? 2000 kg. So 2000 kg means you have to multiply that 50 into 2000. That's another 1 lakh. Fixed cost is 1 lakh anyway. So 100,000 plus 100,000, that's 200,000. Okay, what's the total revenue then at the break-even point? In the total revenue also we can calculate. Total revenue equal, I'll show you that also. Total revenue equal TR is equal, what's the formula? Price into quantity. Price into quantity. So there is answer, you can see total revenue here. Price they are selling is 100 per kilogram and quantity is 2000. So total revenue is, this case is Sri Lankan currency rupees, 200,000. So you can see now here the total cost also 200,000, total revenue also 200,000, which is now we can justify total cost and total revenue equal 200,000, 200,000, right? Okay, so that's how we have to calculate. In this kind of questions can become, future, calculate the break even, calculate the total cost, total revenue at the break even point, like that. What's the third question? The third question asking what would happen if the break even point, if fixed cost reduced to 80,000? What would happen to break even point if fixed costs were reduced to 80,000? Then we have to recalculate if fixed cost goes down. Any idea what happens if cost goes down, break even increase or decrease? Right, raise your hand if you are saying break even increasing. Raise your hand, you can raise the hand. Or raise your hand if you're saying break even decreasing. How many of you are saying? Okay. Yeah, but 4 students raise the hands. Break even decreasing. Yeah, actually this case break even decreasing, because if you reduce the fixed cost, it actually total cost also reducing. That means in order to break even, we have to sell less. I'll justify that one. I'll show the evidence there, the calculation, through the calculation. Now I can write this one as a, now fixed cost over selling prices. Next one, question number 2 is 80,000 is the fixed cost. 80,000 over selling price minus variable cost. This doesn't change. So 80,000 minus the new answer coming 80,000 over selling price minus variable cost equal 1,600. The answer coming 1,600. So which means you can find out 1,000 kilo of ice cream. So which means now previously the according to 100,000 fixed cost, the break even only 2,000 kilogram break even point. But if the fixed cost goes down to 80,000, fixed cost goes down to 80,000, the break even also falls, right, to 1,600. Right, that's the answer for these questions. So I think today we discuss in this session, we talk about what is break even formula, and we do a couple of questions in the break even formula and break even chart. We analyze the break even chart. From break even chart, we can find out some certain things, certain points. Is a break even formula. We depicted the break even formula can be derived fixed cost over selling price minus variable cost. And we do some couple of calculations, right? And then break even chart, we define break even chart and we find out the figures, what are the important elements of the break even chart, what it shows, margin of safety concept we learn, we talk about the advantages and disadvantages of the break even model. And finally, we talk about the some case study activity, Galle ice cream case study, and we figure out the activity number 1, the how much they are earning at the break even, and their total revenue and total cost is equal at that time. And if the fixed cost goes down, break even also goes down. Okay, in my next session, I'm hoping to actually do some more what if analysis questions, like break even chart related questions, how break even chart will be move on, and then fixed cost decrease, fixed cost increase, variable cost decrease, variable cost decrease, total revenue increase, total revenue decrease, different situations, different scenarios, what will happen to the break even chart, like that. This is a technical analysis I'm going to teach in my next session. So from that, I'm going to wind up today's session. Thank you very much, guys. See you in my next session. Thank you very much, guys. Have a nice day.
Yes, sir.